Okay, and we are off. Coach Paul, how are you this beautiful Friday and end of a trading week?
End of a trading week and really kind of a slow day. Um, but thank God it's Friday. Um,
TGIF. Yes.
Welcome back to At the Buzzer. We have the coach Dakota with us today. Uh, really glad that you're here. Um, and to the audience, let us know in the chat how your day went. And any questions or comments we'll share with it in the chat. So our goal here on at the buzzer is to review the day's action in different markets and seek what opportunity we can define, and we shall begin. How was your day, Coach Dakota?
Yeah, mm, it was a really crappy day. from start to finish, beginning last night. If you guys, I'm gonna. I don't know how many people are coming over from like fast markets, or I just finished the reversal challenge on air. But yeah, last night, as I was telling you, Coach Paul, I went to the ER because in the middle of sparring, felt some chest pain, and obviously, since it's on the left hand side, your first instinct's like, oh man, I hope this isn't like some like a heart attack or something. Because I'm 31, which is relatively old compared to everybody in that room, and who I was sparring with. And so whenever you feel chest pain, you're like, okay, we need to go get it checked out. So I got checked out, and it was just a really badly bruised rib. Luckily, it wasn't like, what do they call it, fractured or broke.
Yep.
And then that led to no sleep, like very little sleep, right? And I had a great trade last night. Went into fast markets in money. I was up like $1,300. Put a trade on. I'm gonna switch it to my charts, and I want to review it, Coach Paul, and
Okay.
maybe you could relate because this happens to everybody. I got short the NASDAQ. Here's the New York session. We broke down through 23,250s, and it took a while to break down. And with the power of hindsight, it looks like a much easier trade. But I had my stop loss at 254 quarter. And so I got short down here, and it stopped me out at 254 quarter. It was the high of that move, and it sold right back down to my take
Oh,
profit, which I was looking for 170 as my take profit. Um, so that didn't help at all. But it was nice to see that I read the market well. However, the trade management, it was off by a tick. And I think with the power of hindsight, having the patience waiting for the market, because if I would have waited and said, okay, this was support, we broke through the support, we rallied up, support became resistance, and get in like a 3 bar reversal. That was a very simple, straightforward, and easy trade down to the 170s. 170s was my target for a while. Hogan and I talked about it during fast markets. That was like the next level of support over here from July 17th. But yeah, you could call and see the market good, but if you have a bad trade management, sometimes that sucks, especially being literally to like the tick. I wish I was over exaggerating, because sometimes they'll stop you out and they'll go past your stop by like 1 or 2 points or a tick. Nope. 154 quarter on the nose, and then straight down to my take profit of 170. And then we kind of just chopped the rest of the day. So I took a $700 loss, which is still not bad. It's like best case scenario. Um, and going into the weekend, you know, I mean, it's only up from here, right? Is that one way from looking at it?
it can only get better for.
It could only get better. Yeah, I took some ibuprofen, and yeah, look forward to this weekend. Looking forward to kind of like relaxing, re-getting in touch, and then hit the markets again Sunday night. But time and time again, I keep getting reminded about, I don't want to say how simple trading can get or is, but how overcomplicated we make it, and how much we tend to mess up our own trading. Because this was a textbook A+ setup. We break down, we pull back to a level of resistance where we just broke down, and then we just go in the direction of the way that the market decided to go this morning. Now it's easier said than done, but yeah, sometimes with the power of hindsight, it looks very simple.
Now, let me ask you, when you put that stop in, why did you put it at that price?
So
Uh,
yeah, so if we look at this, I had it based off of this candle right here, this candle at 810, that main breakdown where we got a lot of momentum,
mhm.
and so I placed it just above that, which the top of that candle was 153, so I had it at 154 quarter. It's just so amazing, so amazing. Let me see if
There-
I could put my. I'll have to switch accounts. And I'll show you my executions. But how about you, Coach Paul?
Um, well, we talked yesterday. It was a really big, powerful move to the upside. And you asked me, I'm looking to buy it, to buy a dip. But I waited for the opening range. I'm talking so it's interesting. There's 1 minute opening range, 3 minute opening range, 5 minute opening range was all the same. It was made in the first minute.
Hmm.
And found that very interesting. So that first minute, we had buying. So it set the tone. We'll go through that again. That first minute was the highest volume, so it was all buying. But as we talked, we held that high, and volume didn't go through it. And that was it was a very large opening range, 2370, 23,270 to 50-point opening range in the first minute. That's a lot of risk. But that was a lot of buying.
Yeah.
And so most likely it was a big order. I would say institutional, especially with the size of that. It was all buying but we didn't get follow through. And we'll go with the traditional J 3-minute chart. We break out of that opening range here. And we start churning halfway. I don't have the 50% marker, but that's halfway. That's a famous J trade, not J trade, since we've termed a J trade, but halfway into the opening range. And what's happening every 3 minutes? VWAP is going lower. So we can infer from that this market, we have no follow through from the heavy buying on the opening. And with volume weighted average price, sellers came in and they didn't leave. And there was more on balance selling. And then when we closed out, we played around, and this was a tough day. By the time VWAP left the range, we were near our lows. But I didn't trade in indices today. I wanted to buy it. I couldn't find a good place to buy it. I'll look again Sunday night or Monday. But to me, it wasn't surprising that we broke after yesterday's record high close. And from yesterday, we had that huge buying. Overnight, we chopped around, and then selling in rejected buyers. So, for those of you who sold it, good on you. But that's the way I look at it. Looking at the half hour, above the 200 still. Now, what is concerning, and when we get this cross,
Okay.
this is the 20-day in the blue, this is the red. I shouldn't say 20 bar. Should I put candles on there? Or does that bother
Yeah, I
people?
think maybe candles. I
All
could
right,
there.
from the old.
That's yeah. That's a lot better. There we go. I was gonna
All
say I
right,
could barely see it. I don't know if it looks different for the chat, but yeah, I think candles are the way to
all
go.
right. Um, so it's interesting. If we look at that 3-minute opening, 1-minute opening, and we went through that at 5-minute. Look at the half-hour bar here. It's almost the same size. So there was initial thrust of buying that they couldn't follow through. What I'm starting to look at is session VWAP. So we have the regular. I'll make this bigger. So here's the anchor to the opening VWAP. This is the session starting from last night. But all of this blue line is the 20 bar moving average. And it couldn't get over it, even with all this buying. It just harkens me back to my days in the pit when we were talking yesterday. You hear all this volume, and it's buying, it gets really loud, it's really busy, and all of a sudden it gets real quiet. If I use that as a template here, we have all this buying in the first minute that doesn't follow through. So as we talked yesterday, I'm looking, like I said, I'm looking for a place to buy it. I haven't found it yet. Overall, basically a correction.
Yeah.
I look at this action, it's kind of hooking. So I think there'll be an opportunity again to buy it. Also, I don't think big money wants, in this environment of hyper uncertainty and political drama, I don't think institutional money wants to get long in front of a weekend.
Very, very possible. Yeah, that's kind of it's kind of what we've seen today, right? There wasn't any dramatic news event for us to sell off, but we just kind of flatlined. We finished the day up what negative 0.13 or finished it down, and there
Yeah.
wasn't a lot of price action either. So,
Yeah,
and we
we're
know all the drama that could happen over the weekend. I think this past year it's just been either tariff headlines or political wars, just something, and it's always better. At least for myself, my personal trading too, to just the less risk going into the weekend, the better. I can put the risk back on, come on the open, and you don't have to worry about any of those headlines. I think I remember it might have been like MP or Hogue said there's always one or two guys in the pits that would just leave one contract short over the weekend just to have it on.
Well, if there's something big happens over the weekend in equities, it's usually bad news that it gaps down. It rarely just gaps up if it's and goes. And I think we've had this phenomenon on Sunday nights of gapping. We talked about it earlier this week. We have gap downs on Sunday night that end up being bought. So if I'm a fund manager, there's no need for me to put on risk in front of a weekend. I can wait till Sunday night or Monday morning. I'm better off for it. So we'll look at the daily. Trend is still very much intact. We're still holding that breakout, and like you said, Coach, look at the range.
Yeah.
I mean, what did Coach Jay? It's a range for ants.
It's so tiny.
It was
So
a
small.
150 point range, and I have a 250 average true range on the daily. So very, um, I mean, not to be, it can be expected after a big day. We're sitting at literally at at all-time highs for all intents and purposes. And so still, there's nothing here that shows me any change in the trend. To me, it looks onward and upward. Buy the dip.
I know, I know. Today it wasn't really buy the dip. It was more of just
Stay out of trouble.
stay alive. Yeah, stay alive. Stay alive. Wait, wait. I myself included, just waiting for a dip to be bought. I've been looking patiently, waiting for a decent pullback, and we haven't got one, to be honest. We consolidated that we talked about yesterday, how we finished very, very bullish. And so it was kind of just hands off for me today in a lot of my personal stuff. I did the scalping in this live account here at Topstep, but it's just the same thing. It's like, let's just be patient. Let's wait. Big earnings next week with Google and Tesla, and all week. Lots of earnings coming out, and we're going into the second. Well, we're halfway, most of the way through July already. So I think there's going to be plenty of opportunity coming into the next few months. There's always opportunity in these markets, whether it's some overreaction off of a headline where this market just sells off and then we could recover. But there's always going to be opportunities in these markets, and patience is key. Patience is key. I need to work on that for sure. I think we all need to work on that regardless of skill level, but I am not an exception of anything that we still need to work on.
Absolutely. And so let's look at the weekly. You said this is the last week in July. I mean, there's some perspective. Weekly closing at all-time highs. Can it turn around? Well, what would you consider a turnaround? A 3-bar reversal on a weekly? Do you ever look at that?
I don't look at weeklies, weekly charts or weekly candlesticks. It's most I look at is daily. That's about as far out as I get when it comes to my trading. I don't know what a reversal would be considered. I mean, sure, you could say August of last year, there's a beautiful 3-bar reversal. There's one, oh man, this is a while ago, Coach Paul, but I remember one guy says that every time we had, like, I think he said 3 red weeks in a row, he would just buy it no matter what. He's like, I would just, if we ever had like 3 red weeks in a row, he just bought some call options that expired in like 6 months. And he's like, I've had like 1 red trade. And I'm like, I've never even looked at the weekly chart. And he just showed me, he's like, very rarely do we have more than like 2 quarters of just red every single week. I'm like, oh, fair enough. Because every single time we have a red week, it's just usually very dramatic and very fast. And then the rest of the time, it's usually recovering within the next 6 months. And so I don't look at the weekly. If we ever get a pullback, I'm always a bull after any pullback.
It's designed to go up. There's always flow of money coming in, not to sell, but to what?
Yep.
401k, you name it. It's all coming in to buy. So this, we show it again, looks pretty positive, and we'll move on to the S&P.
Perfect. And then while you're moving to the S&P, I was going to show. Look, this is where I got ticked out. This is my trading for the day. 54 quarter. I wish I could make this up. That was
how much. It'll be interesting. How much traded there?
I don't know how to check that. I don't.
Oh, go to. I think you can get a 1-second chart.
Okay. I was gonna say my 3 contracts is probably.
Okay, we'll see. You might not want to know.
Yeah, I might not want to know. Let's see what happened. what traded there? How can you tell? Oh, I need the volume
Oh,
on there,
I
right?
might have to. Yeah, put volume on. Oh wow, look at that! It
Yeah,
was
54 quarter, 54 quarter. So let me add volume. I have to see this. Yeah, it's just insane. Let's go. Chat. Billy said, "Oh, well, I thought Billy in the chat said, yeah, 3 seconds. Let's go to
just regular bottom all the way to the bottom. There it is. Oh well, good news. There was some volume there.
yeah. There was a decent volume. It ran stops. That's what that was. That was a stop run, for sure. And that
Wow,
was
that was in 1 second. There
that
was no.
was 1 second. Yep, just up,
That almost
right
looks like
back
a
down.
fat thumb error. Wow,
Yeah, 54
you got.
quarter.
Did you advertise this on air? And Goldman Sachs said, "Screw him," and we're gonna
I know
well, stop.
that's sometimes it feels like that. Yeah, it felt like that. I wish I could say I never seen it before, but I've seen it before. Um,
Yeah.
it happens. You trade long enough, you see things like that. Whether it's good or bad, I've had it on the positive once, but that's more rare.
Yeah. No, I'll tell you what this. It's better to have that happen than to have no stop at all.
Oh yeah, yeah.
Now, some people look at that and they'll say, "Oh, I got ticked out. I'm never using a stop again." There's a thousand. But if you're not trading with stops, and we've witnessed this a lot in the last 6 months, you risk getting blown out.
Oh
Oh,
yes, yes. Especially this year, when the tariffs were coming, and then during slow markets during the Asian session, where he would be talking about tariffs at the beginning of the year. It was
hmm
100-point drops, and that's scary. It could get really scary when these markets move fast if you don't have a stop. Where I've heard traders say this, it's like, yeah, I'm manually managing it, so I just click close whenever, but we cannot physically click the button faster than the market can move with the technology. So a lot of times is I might have like an emergency stop just in case, and then I can manually manage it that way, just in case something dramatic happens and I can't react fast enough. Maybe I look away from the screen for a second, you use the bathroom, or there's no way we could beat these computers.
Well, that speed. That's why they have ejection seats in fighter planes. They
Yeah,
they have. I consider it an ejection because you're first in the principles and the hierarchy of principles of successful trading. Number one is protect your equity. You can't trade without equity. So I've been around long enough, and it only has to happen once. I've blown up accounts because I didn't put the stop in. I was manually watching. I'll get out. The problem is you don't know when that happens. You've seen it just like that. There's nothing to stop that from keep going another 50 points. And if your account can't handle it, then you're done. So
exactly.
put it in when you put your order in. It shouldn't even have, it's not a habit, it's a principle. Because sooner or later you get it and you don't. If you don't have that discipline, I have a feeling, at least when I did do that, you really didn't accept the risk. Because if I put that stop in, if I'm wrong, then I'm going to lose money.
Yes.
It's in our subconscious. We're like, well, I don't, we say successful traders have to examine the risk and it completely accept it or don't take the trade. When you don't have a stop in somewhere in the recesses of your soul, you're not accepting the risk. Like, even though this one you get ticked out, by the way, it's going to happen. You can
Just a matter of time. Just a matter of time.
just a matter of time. Sometimes you get fouled. Sometimes you're boxing and you get a shot to the ribs and it leaves
Oh,
you with a bruised rib.
yeah. Yeah, it's been a difficult one today. Yeah, just being careful that I don't drink anything to get me hiccups again. I took
Oh,
an allergy medicine so I don't sneeze, and
uh,
I might have to take some melatonin tonight to get some sleep.
yeah. Well, it's gonna be hard. I've had in the pit. I got a cracked rib.
Oh,
Um,
oh man, I can
Leaning
imagine.
against there was a rail, and I'm not the biggest guy, and but I have a big voice. I mean, I can yell really loud. Um, anyway, we had these guys 6'4", 6'5", linemen, and there was a lunge forward in the pit, and had my arms up, and people fell. My rib hit this rail first, and they all collapsed on me.
Oh,
Oh man, like you said, it's hard to sleep. You
yeah,
can't
that's
sneeze. You
anything.
laugh. Oh, so I'm wishing you a speedy recovery from
Thank
that.
you. Hopefully, it's not as bad as what it I originally thought. It's always like worst case scenario when it first happens, but maybe a couple weeks it'll be back to normal. And it was just so unexpected too, because it's not a place where you would expect um, to get damaged. It's this upper left hand side, like it's really just right above my left pec, and it's like the second rib down from the top. And like if you say ribs, everyone thinks like below near your abs, but no, it's way up here. It's like you don't even defend
Chest
that.
plate.
Yeah,
Did you get an X-ray?
I had a CT scan,
No. Okay.
and they're just like come back Monday if it's if it's getting worse, and we'll do it. I'm like okay, fair enough.
You're in Utah. Everybody in Utah is tough. Rub some dirt on it and move on.
Yeah, yep.
It's the West.
That's how it is. It's like, yeah, if you could still walk, you could still move. If the pain doesn't get better in a week or two, just come back.
All right. We're looking at again the weekly and the S&P all-time high on the weekly, still very much like the NASDAQ. Let's look at the daily. Well, it looks a little different than NASDAQ. It did make a new high. Look at that range. Wow. What
It's
was
crazy.
the range today was 35, and the average true range on the day was 55 points. We were at 35. Still looks very solid to me. We'll go down to the 30. It's a little above that 200 bar moving average. Once again, we have a cross here. We can start braiding. We'll look at the opening range breakout.
And this is in the ES, right?
The ES,
Okay.
yes. So again, this time this almost looks like a trade you got today. Someone got ticked out here above the opening range, but notice there's still what you watch the Dom, right?
Not when I'm trading. No,
All right,
no, I don't. I don't. It drive
but
me crazy watching it.
yeah, glad to hear. I can't. I get I get really anxious. Um, but when I see things like this we go right to the high before the opening, and to me it shows me they're still selling in the Dom, resting orders to sell because they couldn't. I mean, they went right to the tick. Um, the nasty wick, but let me go. We'll do the anchored VWAP again. Got a lot of VWAPs I have to close. You notice with VWAP, they all come together. All right. Now this white is the session VWAP from last night. Yellow is anchored to the opening. Once again, it starts sloping down after the initial open. Now, a little different than NASDAQ, this was a sell candle. There was selling in here. And it continued on VWAP every 3 minutes. It's going lower. We close out of this. Then we close out very much like NASDAQ. Really, after the first half an hour, just volume died out and the movement died out. And we had a small range. So for my way of looking at this is still, when we talked yesterday, I said I'm looking to buy a dip. I didn't find it. What I'm going to look for is the first half hour tomorrow night. If we can break above it and takes with some volume, I'll start buying it. Or better yet, I'll wait for the opening on Monday and go from there. But I still like buying it, and this is still in a bull market.
Mm.
Anything else you see in the S&P?
It's very similar to the NASDAQ today. It's just opportunities to buy it. I've been struggling with that lately. When a lot of people struggle with it, trying to find places to buy it when we keep making all-time highs, because when we do sell off, you expect a little bit further. You wait for better opportunity. Like you're just waiting, and then you miss it. No, nothing else. I think this upcoming week, earnings are going to be in focus, and just patience. If we do get some nice sell-offs, then I'm looking at that to be buying opportunities. And I would honestly, I would expect a bigger sell-off today in like the S&Ps than what we got. So maybe there is some further downside to go test the top end of that daily range candlestick that we closed out of.
Yeah, when we talked, get some shorts in there.
Yeah, get back to some
Some
moving
bad
average
shorts.
ones. Yeah.
So let's move on to gold. Did you trade gold today?
I did. I had a short last night during slow markets. It worked out. I closed it out at right before it started to rally. So I got out of that one pretty well. And it
Do you want to
rallied
bring
up
that
to
up
like,
on your chart and go through it?
yeah, go ahead and do that. Let's go over here and go to some gold. And I talked about it in slow markets. Sometimes you get a little bit of luck on timing. But this is what I was looking at. I like to look at the hourly chart. And last night and over the past week or so, we were in a nice downtrend where we were making lower highs. I got in short up here in these 40s here last night during slow markets. I was only targeting these upper 30s. Got out, and it looked like during the London session, we broke out and we started to break out of this trend. We had a little bit of a pullback down to these 3350s, but to be honest, I'm kind of thinking that since we broke out of this downtrend, this might give us that opportunity or that momentum we need to come back up and test these 3380s. I'm looking at these 3380s for a little bit now, so I'm not going to be surprised. I talked about it yesterday during slow markets and fast markets, but this is my target for next week. I don't know if it's going to happen Monday or the next day, but early next week, if we do find some buyers, these 3380s is what I'm going to be looking at.
All right. Well, let me show. I'm going to bring up. It's the end of the week. I'll bring up a weekly chart. Well, let me get that. right. Weekly chart. I should just X this out. It looks pretty fresh. We had the correction on the weekly. We go to the 20-bar moving average. We couldn't break. We've had a pretty subdued week. Believe it doesn't seem like it does. I look at that weekly candle, and it really, wow, that's a pretty bullish chart to me.
Yeah.
Um,
Over the past few years, it's been in a very strong bull trend.
oh yeah. See, every time we get these corrections, when we look weekly, I'm going to put one thing I'm going to look at now is the trend line. Where is it? That trend line. Would you say 30s you're looking for?
I
Or
am
80s?
looking, yeah, the 80s, the mid 80s,
Okay.
3380s.
So, with a steep, this is almost a 45-degree angle. This high keeps the trend line in a weekly basis comes down dramatically. We're going to be right at it. So, do we get a breakout of that weekly? We have a pennant forming or a Dorito.
The Adobe Street.
Yeah.
Maybe. The more I look at it, the more I zoom out, is maybe we continue to make higher lows. On May 14th, we made a low, and then another low on June 27th, June 29th, and then July 8th. And so we're making these higher lows, and gold is holding pretty strong. And here, I switch it. Yeah,
Yeah.
yeah, that's basically where you drew that line. It's zooming in on the hourly chart. I have a hard
Ah.
time seeing gold breaking below this trend line. That's a solid trend line. If we do, then maybe we have a decent sell off. But I don't see that happening yet. And going into this week, I'm much more on the side of looking to come back up and test these 80s. If we break out, then maybe we could come up and I don't know. Do we see those 3400s again? Very, very possible from my view.
All right. So let's look at the daily. One of the things we've been in this correction, I'm going to go to a line chart real quick so you can see this. 50, the 20 has crossed the 50, and it's under it now, and it stayed under, but we're not moving lower. This market overall is in balance. I believe it had a chance to really break. But after looking at that weekly, boy, it's going to break out of here. Look what the average true range is doing. Since the blow off high, it's just creeping down, so it's taking the volatility out of it. It's finding balance over since April.
Oh yeah, you're a big ATR trade. Like I use the ATR as well. It's the only way I gauge volatility sometimes, from a day-to-day basis and week to week.
Yeah, well, the way I came about it was there's the famous Richard Dennis traders called the Turtles. They became half of them became very successful fund managers in the futures business, legends. And it actually came from a guy named Wells Wilder. You ever hear of Wells Wilder?
I have not.
He's the father of the modern technical analysis. He wrote a famous book. Check it out. I think
Okay,
it's
I'll
like
have to take a
thousands
look.
of the original.
Wells
Wells
Wilder. Okay.
Wilder. One of his books is hard to find. It's like thousands of dollars. He was the first one to come in the futures and use technical analysis, and really he developed the RSI, average true range. And it just goes on and on. Check him out.
I will. Wells Wilder. Okay, I got this
Yeah,
on my list.
and he developed the ATR, and it's like you said, it's developed to show what the market's volatility is at every candle. It changes. Some people, you would measure the size of the candle, right? It's a big candle, it's a small. Well, that's risk. So then it averages it out. The average, now, I think what throws people off is true range. It's really just the average range. Now,
Correct.
when there wasn't a overnight session, there were gaps on a daily chart. So what the true range there in the calculation, it helped compensate for those gaps. The bottom line is the average true range, and fund managers use this to position size. So if you're sitting at a poker table or a blackjack table, you have to measure your bet.
Right.
The gambler comes up there and put it. Yeah, I'm in. And throws the ante and bets it all in one. Well, that's pure risk. That's the epitome of gambling. If you're not measuring your bet or your size or your position size, you're not going to be. You could be taking too much risk, or maybe you're not taking enough risk. So it's for position sizing. And when we notice here, look at what it's doing. It's coming back to levels we haven't seen since last year. So the market is finding balance. The ranges are coming in. There's not a much trend. So this would be reflected in the options premium. It's another volatility index. But the key point is, whatever time frame you're trading, get to know the volatility. The best ways, and I know, is the average true range. I'm telling you, commodity trading advisors, large funds, measure their position size using the average true range. So when it starts collapsing or coming in like this, there's a higher probability when it moves out, you're going to see volatility expand, because a breakout is what?
Yeah,
Bigger
expansion.
Expansion. So let's look at today's action, starting with last night. You kind of showed it. So the 5 o'clock Central. Maybe I want to get that a little bigger. Interesting. There really wasn't. So you got a nice trade. You got to sell. Covered well.
Yeah, I got a little lucky on the cover, just like I got unlucky on this stop loss today during the day session. But yeah, I closed it out right there at like 38s.
You mean luck runs both ways?
Luck sometimes runs both ways. Yes.
Yes. Well, it was a great blues song, and one of the lines is, "If it wasn't for bad luck, I'd have no luck at all." But luck runs both ways. Skill doesn't. So if you develop a process and your skill in taking risks becomes better, without that, you're just relying on what? Good luck.
Mm-hmm.
And that's a 50-50 proposition. So last night we did have a nice break, but it was interesting as VWAP really never left the range of the opening range. When the buying came, boy, that was London?
Yeah, that was London.
Um, let's
Yeah,
see
it
what happens.
came in
Yeah,
pretty
go ahead.
viciously too.
Yeah, I mean, let's go down to the 5-minute chart. Last night at 1 o'clock Central. Oh, wow. Yeah, we didn't even get a J trade.
Yeah.
So,
Question for you, Paul, is
mhm.
this is summer. We're in the middle of summer, basically. And
Mhm.
we were talking about average true range, contraction of these markets, slowing down, more consistency. I forgot where I was going with that one, but this is completely, I don't want to say completely different from last year, but like you said, things are finding balance. We
Yes.
had crazy volatility, lots of uncertainty going in with a lot of people don't realize this is only what this is the 6th month of a new presidency. We just went through crazy tariffs, inflation. Things are starting to settle down. We're grinding through all-time highs. This feels like a very normal market. It seems like it's quiet. It's normal. Not as much is going on, and now the markets could kind of just settle down, um, find that value, and hold strong. And maybe we just go back to what we would normally do in these markets, and that's just grind higher in lower volatile conditions. And then if we get some crazy headline, that's typically corrected pretty quick. Do you find this to happen a lot during the summer in your trading?
Um, yes, on a typical summer market, um, the ranges come in, the volume goes down. Now, that's usually in the equities. Commodities are different. They're seasonal. I guess you could say equities are seasonal because I'd say, the Pareto principle or the 80-20 rule. 80% of the time in the summer, equities slow down. Ranges go down, volume goes down. And because there are no absolutes, you have to be prepared, like we talked last summer, where it got volatile. But I think we're in a traditional summer now. Also, we're coming to the end of July in Europe. August, I don't know, for our audience in Europe, you can confirm this. The large amount of people in Europe take the month of August off. They look as Americans like, they take a holiday, and good on them. Like I know a lot of Australians. I used to do a lot of business in Australia, and they call a holiday for them because they have to travel. Like, you ever been to Australia? It's a long way. It's a long flight. Or to Hong Kong, or I used to go to Singapore. It's a long flight. So for them to travel, they travel. And they take it's not just a week. Then my friends are like, what do you do in a week? Like, you're just finishing traveling. You're not enjoying life. And I kind of agree with them. I mean, we don't have that sense for the most part in the United States. But August is big um, vacation time in Europe. It will slow down unless some major event changes that. So I'm glad you brought that up, Coach, because that's coming. We're knocking on August door. We could come into really slow markets without um, a catalyst. Like that
Yeah,
can happen at any time.
like a carry trade.
Like a carry trade. Exactly. But it's sizing up. I mean, it's really coming into that environment. You can feel it. Like like today, that action in the NASDAQ and in the equities, big buying on the literally first minute. It was like the big order, and there was really then when volume went away, the market just drifted lower. Um, and that to me is a typical summer because we had small range. It didn't feel like it in the opening, did it?
No, the opening in the New York session was pretty wild, and then we picked a direction, and then as maybe 20 minutes in, it just died. It's like all the business was done in the first 30 to 1 hour, and then it was just pack your bags and go home. And there wasn't much left to do for the rest of the day. Like that's what it felt like, and that's what it was. We finished right where we were at. Especially, I mean, NASDAQ ES, the same thing. That first 1 hour candle, first one or second, yeah, all right, up until like 9 a.m. Central Standard Time. That's when most of the volatility was just done and just contracted. And we're sitting here in the NASDAQ at 220s. And the ES, I mean, not very far off, really. I have a doji on the daily.
All right. Well, let's move on to the crude. Very. We're looking at here. What's the week? Let's look at the weekly and see just how constrained we have been. Still, that pink line. Again, we put this in a while ago. We have not. It is still that area of 77 or just below 80. Sorry, Coach Jay, I said 80. He doesn't like to use that word.
For crude oil?
For crude oil, yeah.
Yeah. Yeah, that's a solid number on crude.
It's a solid number.
Yes, it is.
But on this weekly, we're still in that sideways range. There, and look at this week's range. And it's that's a range for ants. Tiny range. Wow. No wonder it was. Let's look at looking at the daily. Today's range reflected the whole week. So you talk about summer markets. Well, here it is. We had a nice break today. It happened quickly. Wow. Whatever news came out. This is after the opening. So let's look at the 3-minute from 8 o'clock. I can see the volume. There's the U.S. Open. Now remember, we've talked about this. Crude is an international commodity. It's used 24/7. But look at VWAP, session VWAP. They're literally stagnant all the way through this range. Then we break out of that range here. VWAP follows it here. And we do nothing the rest of the day. So hard to trade, not much. Don't want to give it too much time. One last one before we go. Oh, Bitcoin. Let's actually look at a weekly. What do you think of that weekly?
I don't know. That's a tough one. That's a tough one. I don't read weeklies, but I would. If
I said this was a
go ahead.
5-minute chart.
Yeah, I would expect a pullback.
Okay.
But it's tough.
Yeah, for this breakout, it was a pretty small range on
Yeah, I'd like
top
to
here.
see 11,000 or 100. Was that
Uh, uh,
110,000?
110,000. Yeah.
Yeah, a
So
retest of 110. But you don't want to short a market like that.
it, I can agree. I agree. What's the? I mean, I don't. Maybe I'm Captain Obvious. It's in an uptrend. It's near
Yeah,
all-time highs. It can gap at any moment.
correct.
All right. Daily, we have found some balance up here at these all-time highs, and I'm with. If I'm long, I'm like, I don't like this wick up here with this heavy volume, and we're staying majority of the time underneath it. Kind of a blow off high. Now, let's go look at the 30-minute. That was last night. I framed out the first 5 minutes. We made the high last night on the opening after a gap higher. Now, there was something happened in Congress about what I try to pay as little attention to what goes on in Washington as I possibly can.
Probably for the better. Probably for the better.
Yeah,
I've caught myself in bad trades just because of my own opinion on different events that goes around in the world.
yeah, I did that too. I was raised as an economist. That guy kept me being an economist and being a trader are not a good combination.
No.
So I had to shed that.
Yeah.
But look at this gap we had last night and made that high. We don't leave it. How many times did we look at that? I look at that, and being a former broker, there's selling up there, big selling that's hidden. Like you don't see it, but why wouldn't it one time, two times, three, four? I mean, and all this time it's spending there, and it's touching it, but it's not following through. There's a seller up there. It's almost like um, a bird flying into glass. You know, they don't. By the way, I don't know if you know that. They just big, at least in the city, these big glass skyscrapers. Birds don't see it,
Oh
and they
wow.
bang it. It's sad. Like because in Chicago, it's on a migratory. The Lake Michigan goes northwest for 333 miles up into Canada. And migratory, it's kind of cool. Sometimes you see, I've seen white owls, I've seen all sorts of different birds in the fall when they're coming down, going south. But when they come down, they don't know what a glass is. And it's glass skyscrapers, they fly into, and you see 20, 30 birds overnight.
Wow.
Um, yeah, that's what this kind of movement reminds us. There's something there that's not following through. Either there's no buyers left. That's one thing Pete Stottlemyre taught me is instead of trying to define the high price, define the last buyer. Like I'm like, what do you mean? But this is kind of almost like here we have this gap. We have buying. There's no follow through. It's like the last buyer. It's like
Hmm.
weightlifting, and you've gone to a new. I'm pushing 250 now, and I was at 240, but I'm getting here, and I can't get any farther. What's going to happen?
Yep.
This. Well, it was a pretty big break. So looking at that, we had VWAP leave the range, never closed above it. We look at the 30. It left right away with a wick. Look at that. You see it on a 30, a triple top. Kind of bearish action, but not to be. It's not unexpected. But other than that, think we're at time, are we not?
Yeah,
Yes,
we
we
are.
are.
Any last thing? I mean, that's good for me. I'm excited for this weekend, Coach Paul. I'm excited for next week. Next week's going to be a big one with these earnings. Maybe we see an increase in volatility, in particularly Nasdaq on the Wednesday. I'm not sure. It's always interesting with the president and some of the headlines that's been coming out, but expect low volatility until we don't get it. There's been too many times where I sometimes can get caught into a bad trade as well, expecting a breakout, and then we just continue to be chopped in a range. But no, that's all I have. I've enjoyed covering for Jay. I know I'm not Jay and doing the best review, especially today where I'm struggling, having deep breaths after long words. But no, Paul, I really appreciate it, and it's been a while since we've been able to be in a class together.
Yeah, I enjoyed it. We'll hope to have you again sometime soon. Thanks for being here. Our audience appreciates you. You are the star.
No,
Um,
no, I'm just another guy trying to navigate these markets like everyone else.
that's why you're the most humble guy, and it's it's a it's a pleasure watching you operate and working with you. And everybody in the audience, get some rest this weekend too. We just talked. It is summer, at least in the northern hemisphere. For our friends
Yes,
in the southern hemisphere, enjoy your weekend too. Get out, enjoy life. Maybe spend an hour reviewing what you did this week, and not much more than that. Come ready, rested for next week. And we will see you again next week, and then Jay will be back.
yes. Hopefully he's enjoying his vacation too. So take care, everybody. Thank you, Paul,
All
once
right.
again, and I
Thank
will
you.
see you Sunday night for my. Take care.
Bye.